Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 12th, 2025, and we're diving into H&R Block's fiscal 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. H&R Block has reported a solid fiscal year with notable revenue and earnings growth, and I'm excited to break down the details with you.
Revenue and profitability overview. Let's start with the top line. H&R Block reported a total revenue of $3.8 billion for fiscal year 2025, marking a 4.2% increase. John, what drove this growth?
The revenue growth was primarily driven by an increase in the net average charge and higher company-owned return volumes in the U.S. This was slightly offset by lower interest and fee income on Emerald Advance. The company's focus on expanding its small business operations also contributed to this growth.
And what about profitability?
Net income from continuing operations increased to $609.5 million, a 1.9% rise. The adjusted earnings per share came in at $4.66, up by 5.7%, which is a positive indicator of the company's profitability and efficient capital allocation.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $2.81 for this quarter. How did H&R Block's actual performance compare?
H&R Block reported an adjusted EPS of $2.27 for the quarter, which fell short of the analysts' expectations of $2.81. This discrepancy can be attributed to external factors that delayed the recognition of a one-time tax benefit, which would have increased the EPS by approximately 50 cents.
That's an important point. How many analysts were surveyed for this forecast?
There were 3 analysts surveyed for this EPS forecast.
Capital allocation and shareholder returns. H&R Block has been active in returning value to shareholders. Can you elaborate on their capital allocation strategy?
Absolutely. H&R Block returned $600 million to shareholders through dividends and share repurchases. They increased their quarterly dividend by 12%, marking the 8th consecutive annual increase. Additionally, they repurchased approximately 6.5 million shares at an aggregate price of $400.1 million.
That's impressive. How does this align with their long-term strategy?
The company is committed to maintaining a disciplined capital allocation strategy, which includes consistent dividend payments and share repurchases. This approach not only rewards shareholders, but also reflects confidence in their ongoing transformation and growth initiatives.
Future outlook and strategic initiatives. Looking ahead, what is H&R Block's outlook for fiscal year 2026?
For fiscal 2026, H&R Block expects revenue to be in the range of $3.875 to $3.895 billion, with EBITDA between $1.5 and $1.35 billion. They also project an adjusted diluted EPS of $4.85 to $5, with an effective tax rate of approximately 25%.
What strategic initiatives are they focusing on to achieve these targets?
The company is intensifying efforts to engage clients with more complex needs, expanding their small business reach, and leveraging technology and AI to enhance business efficiencies. These initiatives are aimed at delivering personalized experiences and distinguishing H&R Block in the marketplace.
Key takeaways. In summary, H&R Block has delivered a strong fiscal 2025 performance with notable revenue and earnings growth, despite missing the EPS forecast. Their commitment to shareholder returns and strategic initiatives positions them well for the future. John, any final thoughts?
H&R Block's focus on innovation and client engagement, along with their disciplined capital allocation, makes them a compelling investment prospect. Their strategic initiatives are well aligned with market demands, which should support continued growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on H&R Block's performance in the comments below.